Alright guys, welcome back. Another day in the books and another down day for Mama Market. A few names getting bitch slapped here. Netflix is down 8.5, you got Nvidia down 5.5, Tesla's down 5.5, TSM down 4.5, Microsoft down 1, Meta down 4.5, QQQ down 2.7, S&P's down 1.7. Now, if you put your entire account into Broadcom calls before the close, you are catching a 12.5% here in the after hours after earnings. So good for Broadcom, but for the QQQ and the S&Ps here, not a great close. You got the S&Ps closing right above their 200 SMA, which will be an obvious over-under level. And then for the QQQ, you actually close a little bit below that 200. So looking at the weekly on the QQQ, and I think the last line of defense here for the bulls would have to be that weekly 50. And they've got the weekly squeeze setting up. They have 6 points out of 15, so they haven't done too much damage here to the weekly structure. If they go and break the weekly 50, then they're going to do some damage. And I think the path forward could be under that 50. Weekly squeeze might break short. That might kick off your pullback to your monthly 21. And I think we talked about this a few weeks ago. Bigger picture off the monthly, the market looks beautiful. The perfect score of 15, bull trend, bull structure, bull momentum. It's just that bigger picture, you haven't pulled back to your 21 EMA in about 2 years and change. If this was a 5-minute, 15-minute, 30-minute QQQ, it would not be the craziest thing for a pullback towards that buy zone. That is the ebbing and the flowing of an uptrend. Push off your 21, pull back to it, a little back and forth, push off your 21, eventually got to pull back to it. So yeah, my thinking is under that weekly 50 in that weekly squeeze, you might get that good washout down to about 450, 440, which from an opportunity perspective, I think makes for good swing trading and good day trading. What won't make for good swing trading is price action in this box. Below that 21, above that 50, I think you keep a day trade focus. So for tomorrow, the following day, every day moving forward, weekly 50, really important level of support. They break it and can't get back above it. I think you short every pop down to about that 450. For the S&Ps here, I'm going to take a look at that weekly chart. And I have the same opinion. Below that 21 EMA, above the 50, I think you keep a day trade focus. If they break the weekly 50, they might take that squeeze for a ride lower. Could kick off a pullback to that 21 EMA around 5,300. If this was a 1-hour S&P, we'd all love that pullback. If it's a monthly S&P, there's going to be a lot more emotion behind it. But it could be a pullback just like that pullback. Not the end of the trend, not the end of the world. Pull the thing back, shake the tree, give it a good reset, eventually print a squeeze, and off you go. So below that 50, what's our level here? Weekly 50 on the SPY is 56.50. A good break and a good close below 56.50 could see your weekly squeeze breaking short down to about 53.50. All right, now on the flip side, if you can avoid disaster, and not disaster, right? I think that'd be a really good buying opportunity. But to avoid a deeper flush, what do we got to get here from the bulls? And if you look at the rankings on the spreadsheet here, weekly QQQ has 6 points, S&Ps get 6, Dow Jones gets 8 points. You don't have awful weekly charts. Looking at the 2-hour, 1-hour, 15-minute, 30-minute, they're all pretty rough. QQQ has a negative 15 on the hourly. And if you're new to the channel, strongest possible score is plus 15, and the weakest possible score is negative 15. So QQQ 30-minute negative 15, QQQ hourly negative 15, QQQ 2-hour negative 15. S&Ps negative 15, negative 15, negative 15. So from a 4-hour chart down to a 30-minute, whole lot of negativity. Now a comparison, looking at Google and Microsoft, not all that bullish, but their 1-hour and 30-minute time frames, they get positive scores. meaning in the short term, both Microsoft and Google, they've done something on the hourly that the S&P's QQQ, every index, every other Big Ten name hasn't done yet. And that is, I think, at least put in a good attempt at trying to get a bit of a bottom coming in. So the hourly on the Google here, now to be clear, I'm not saying you go and buy Google, but if the QQQ can look a bit more like Google on the hourly, you maybe keep it on your watch list. All right, big pullback, you're getting that downtrend action. All right, pull back away from your 21, pop back into it, away from it, back to it, away from it, back to it. Then you're getting a bit of a turn. All right, turn comes from momentum and then a little bit of structure. Momentum histogram finally shifts back above 0. All right, bear cycle, dragging price lower, bull cycle, maybe the end of the flush there. So that turn gives the bulls maybe a little wind at their back. And then in terms of structure, again, it's not bullish. If it was, we'd have a buy signal here. Getting your 21 EMA back above the 50, that can give the bulls a little bit of breathing room. Doesn't guarantee Google's popping back into 180. It can help them at least catch a chill pill. A little more back and forth, a little bit of stabilization, and then maybe on a 5-minute, 15-minute buy signal, you're buying it off the hourly 21. Momentum turn, structure turn, they got a decent chance here of getting it out of an hourly downtrend and maybe into a bit more of an hourly uptrend. Microsoft doing very much the same thing off the hourly. All right, big flush, pop it, big flush, momentum turn, 21 back above the 50. Does not guarantee Microsoft is going to rally here, but they're maybe trying to carve out a bottom. So maybe you're looking at that 395-ish level, looking for your next 15-minute, 5-minute buy trigger. Now, take those hourly charts, compare them to the S&Ps and the QQQ. They haven't done any of that. Nor has Tesla, Meta, and NVIDIA, all the above. Your QQQ hourly, and here's why I'm a little bit frustrated. I opened up a call butterfly yesterday without actually having a buy signal. No 15-minute buy signal, no 30-minute, no hourly. We don't take trades without triggers, so bad behavior on my behalf. But yeah, looking at the QQQ hourly, very typical downtrend action. Flush away from your 21, pop back into it. Flush away from it, pop back into it. Flush away from it, back into it. Away from it, back into it. Away from it again. On none of your pops here have you gotten that 21 back above the 50. You could even drop down to a 30-minute QQQ. 21 under the 50, walking that thing lower. So they can hold the weekly 50, they can hold the daily 200. They can do their thing, try to hold these bigger levels of support until we get that turn signal. All right, MACD line back above 0, 21 back above the 50. It'll be choppy or a break back below that low eventually. So take Google is a potential poster child of a little bit of short-term bottoming action. 30-minute time frame, 21 back above the 50, momentum line back above 0. If you can combine that with 5-minute buy signals, 15-minute buy signals, you don't buy calls that expire 3, 4, 5 weeks out. You buy short-term calls looking for a pop back into 180-ish. Not a crazy move, but a good bang for your buckaroo. So that, my friends, will be the key. We are at big support. We do have all right looking weekly charts. The 15-minute, 30-minute, 1 hour, 2 hour, etc. They continue to behave more like downtrends. Get that momentum turn, get that 21 back above the 50. Could be room for a short-term buy signal and a bit of a pop here off of support. If not, and they dump it below the weekly 50, then I think we're in a short to bounce market, potentially all the way back down to the monthly 21. And I gotta stress here, guys, if we do pull back to the monthly 21 EMA, you will definitely get the CNBC Markets in Turmoil special. They're gonna make it sound really bearish, and hey, for all I know, we pull back to the monthly 21, and we keep on pulling back, and QQQ goes to 0. until the signals change, I'm going to watch that like a 5-minute time frame, a 30-minute, a daily, or a weekly. It's got the strongest score possible. Perfect trend, perfect structure, perfect momentum. Nothing about a pullback to a rising 21 EMA is bearish. When they're doing that in a monthly time frame, everything underneath it does feel really bearish. If they got to flush it, let them flush it. That'll be our first good reset in about, going on 2 years, guys. Doesn't guarantee it makes for a great buying opportunity, but it certainly could. But all right, y'all, have a good night. Keep a day trading focus. If we break bigger levels, look for a few swings, and yeah, take it day by day. Market will get easier. Adios.